Alrighty, guys, welcome back to the show. I hope you guys are all having a great and an amazing day today. I wanted to jump on, go live. We're going to be trying to go live more. I want to go live like 3 days a week if possible. I know it's always hard, just with my schedule, just because I work a lot, right? I'm a workaholic, as they say. We're going to just bump this out here and put in this, and we're going to be kind of today we're going to be kind of just breaking down what's going on in the stock market over the past week. We're going to be talking about some stocks here. If you have any questions, let me know down in the comments here. So and let me see here real quick. What we might do is make this smaller and then move it to the other side right here, so you guys can kind of see the chat, or we'll move it up here. That probably is the best right there. Yeah, I think that looks good. If you guys have any questions, let me know here. So, guys, starting off, what has been going on with the stock market? So, we'll go ahead and we'll just pull up SPX, which is just the S&P 500 index here. And you'll notice, in the past week, so we'll go to the weekly chart here. In the past week, we've seen just a lot more sell-off. We see this pretty much steady downward trend here, where everything's just kind of selling off right on this line. And yet again, it hit that line and we just got sell off, right? Natural resistance for this stock here. And during this time, we're seeing, high interest rates. We're seeing pretty much we're pretty much seeing the perfect storm for a crash in 2023. That's what everybody's saying. Do I think we're going to have a crash in 2023? It's so hard to judge because, the average stock market recession lasts for 14 months. So right now we are about, maybe 10 months into this thing. So technically speaking, we still have 4 months left of this crash. So that's for the average. I think we'll probably look at like summertime, like some sort of summertime rally before we see this thing pushing up again. Do I think it's going to hit highs? No, it's probably going to push up, to 4,400 to 4,300 for the S&P 500. I just think, there is a lot of opportunity right now in buying these high quality picks just at a super, super affordable price. And that's kind of my mindset. In the past couple of days, we've seen a ton of companies getting a lot of sell off. We have Lulu, which is, I believe, Lululemon here, Lulu. This thing got literally obliterated on Friday here just because of a missed earnings. Now, companies have, missed earnings all the time, but the issue I always think with companies like this is, it's a lot easier to make money last year just because there's so much money out there, right? Everybody had stimulus. Everybody had, that $1,400 check come in. And then on top of that, Lulu is more of a premium product. And you'll notice here, just literally got obliterated just because of bad earnings. I think we're going to see this a lot among retail. We've really already seen it from a handful of companies in that retail space. But look at the minute chart here. If we go ahead and we pull up the minute chart, you guys will see just how massive the sell-off is, right? You'll notice it was trading for $375 and it ended the day at lows at $323 a share. So that's a sell-off of about $50 per share, which is quite a lot. It really is. So this one I would put on a watch list, right, to look for a possible swing trade, day trade opportunity. See if we can get some buying pressure back up. And the reason why we've seen this is just because of the Q3 earnings report. We're gonna see a lot more companies like this. We've already seen it, I believe, in Walmart, where the company, we'll go to the daily because I think it was a little bit ago. Yeah, where the company went from 158 all the way down to 117. A massive gap, right? One of the largest gaps this company has ever seen, and it was just because of a missed earnings report. That's all it is. Luckily, we had that rebound. I think there could be some opportunity, with Lulu for a play like this, where it sells off for bad earnings, and then, we slowly start getting that buying pressure back in. Now, does that mean I'm going to buy it? Probably not. I just think there's little more opportunity elsewhere out there right now. We also have companies like Rumble, which does have some support here. At 300 or at $7.70 here. You'll notice we just got natural tendencies. So I took a swing trade to see what will happen, setting my stops, below $7, risking, 78 cents to possibly have this thing push up to $10 to $12. So I'm risking 70 cents to possibly make $2 to $3. That's a 3 to 1, 4 to 1 risk and reward, which is a pretty decent here. So I do think opportunities like this. We've also seen, DWAC, a lot of volatility with this one here. You'll notice, let me go ahead and zoom out a little bit. You'll notice we saw this stock go from 16 back up to 30, back down to 21. Now, this one's always so hard to judge, honestly, because this company isn't the most profitable. And just the volatility we've seen is very, very high, you'll notice, right? Nice upward trend, hit $101, got slowly obliterated back down to 20. So something like this I think is hard to judge because it'll most likely just continue to stair step its way down. What else do we have? We have Tesla here. Let's go ahead and pull it up. And if you guys have any questions, by all means, ask. If you guys want to pull up a stock, by all means, ask. Because that's why we're doing these here. Tesla here, you'll notice Tesla has support here pretty much under 170 or 180. You'll notice we just got that natural tendency to see buying pressure here. So I do think there could be a possible move for Tesla right at this space here at $179 a share, hopping in, setting your stops at 165 to 150, risking $20 to possibly have this thing push up to 240 to 260. Could be a decent swing trade. Something like this will take a lot longer to plan out, not plan out, but a lot longer to execute rather than a company like Rumble, which is a little more volatile, goes up and down at more of a rapid rate. But still opportunity. There's so much opportunity out there. You just got to pretty much find it. Pretty much, I love going to Finvest. And you guys can pull up the S&P 500 map and see what stocks are moving. This is how you find, those good trades. So we have Tesla up. We had the entertainment industry just literally getting a ton of buying pressure on Friday here. Which is really, really interesting here. So there could be something going on in that space, right? We have Disney up. We have Netflix up 3%. We have, Paramount up 5%. So there is a lot of opportunity right now. I just personally love going to this so you can get a general layout of where things are going. Also, go to the groups tab and you guys will see what sectors are performing well. So if you're going to make a swing trade or some sort of trade and you're looking at it and you're hopping in right now on an energy stock, you might realize that there's a lot more selling pressure than other industry or other sectors. Hopping in on tech, we've seen some decent growth out of this thing, 9%, 8% on basic materials, and then some stuff to kind of stay away from. If energy over the past month, energy has just seen this steady sell-off. So something like this is always very, very important, to look at to get a general idea of where these stocks are going and stuff like that. I just think that's, what I always do. It works well. What else do we have? We have Google. We can go ahead and pull up. So you'll notice here, I think that anytime this stock's pretty much under $100, it's a decent stock to buy. Their last earnings, they brought in $69 billion. The company has $100 and something billion in cash. They make a lot of money. They're the owners of YouTube and a whole bunch of stuff really, and they make a lot of money. And a lot of people like to say, well, Carter, Google is an overvalued company. Maybe it was, right? Maybe it was at $150, a share. But we've seen a sell-off of about $60 from this stock, right? That's billions of dollars. If you have any questions, make sure you ask them down in the comments right now, so we can pull them up. If you want to go ahead, and we can go ahead and pull it up and look at it. What else do we have? Yeah, so I've been looking at Rumble. I've been looking at all these stocks that we've been talking about. You know, a company like, we've seen a lot of sell-off from SoFi. You'll notice here from 24 all the way to $4. You know, I do think it does have some support near 5, but kind of started stair-stepping its way through. Last earnings brought in 423 mil. Brings in a lot of money. But on the flip side, guys, you know, SoFi, they're in the scandal with FTX, but not really. You know, the banking committee does want to see all of SoFi's crypto reports. You know, but that only makes up, you know, a handful, you know, 5% of SoFi's revenue. So it's not much, but it's still another reason why we'll get some sell off. You know, on top of that, you know, SoFi, they make a lot of their money from pretty much loans, like student loan refinance, people, you know, students taking out loans with them. And right now we're seeing pretty much just an extension get put on where these students pretty much don't have to pay their student loans back for, you know, a couple of months. So this has caused SoFi to fall back down. You know, and I think if they didn't government didn't put that on, the stock would probably be trading from $5 to $6 a share, right in this range. But since they put it on, we got that sell off. Now, does that mean that once they put it back on, it'll get more buying pressure? Probably. It really will, because that means there's going to be more money going into this stock, and into this company. Now another thing here is the average analyst price target for SoFi is about $7, about $7, $7.15. So right in this range, right? So right here. So hopping in right now, if it hits that price target, that's about a return of about 64%. Do I think it's going to hit that? It's going to be some time before we get buying pressure back up to these marks again, for sure. Just because of the whole situation we have. You know, like I mentioned, they make a lot of their money off of loans. And right now we've just seen high rates. Anytime you have high rates, it's going to slow the economy down. And companies like SoFi, companies even like Ford, will get sell off because a lot of their customers buy with credit. And people maybe 2 years ago that were buying cars when rates were 2-3%, now are holding off. You know, just because of these high rates. So we're seeing a whole bunch of just mixed things right now, you know, in the market here, which is crazy. We've seen companies like Carvana. I said it wrong in my YouTube video, but I think I'm not sure what the ticker is yet. So this one here is super interesting. Like I mentioned, another car company. Interest rates are high. People aren't buying used cars, and even with used cars, the rates on used cars are even higher than a new car. So, you know, we've seen just this stock, you know, in 2022, right, go from about $245 all the way to $5 a share. This is and the CEO of Carvana, his net worth is down about 98%, which is crazy. It's still millions of dollars, but it's very, very interesting. And if we go ahead and we can even pull up the minute chart, I believe. I'm not sure when we had that massive sell-off for this. I know it was a couple of days ago. Yeah, we'll go hour chart here. But what we've seen, you know, this stock pretty much do here is just get literally annihilated, right? Look at this thing. 18 all the way to 14, continue to sell off from 13 all the way to 7, and then recently we've had just another massive move where it went from $6 to $3.55. Now the reason why we had this sell off is because of the company has a lot of debt. The company that pretty much manages all their debt is in negotiations for buying out the company. The company doesn't bring in virtually any money. They're unprofitable. You know, if we even go ahead and we look at, we can pull up the financials real quick, even on here, right, you'll notice the revenue is down 2.7%, which for a growth stock, that's not very good. Then we have the net income is down 784%. The net profit margin is down. The net profit margin, is at 8.36, negative 8.36, down 808%. Meaning, for every $100 Carvana brings in, they lose $8, which is not a good side. That's not a sustainable business to do that. Then we have the revenue. Q3 of 2022, they missed it by 8% again. So just not very good stuff going on, and this is just because of pretty much their creditors want their debt, so they're looking to take the company bankrupt or figure out what to do with it. So there's just so much going on right now in the market, guys. There's a lot of opportunity to make money. There's great ETFs out there. If you have any questions, by all means ask, but we're going to end it here. So I hope you guys all enjoyed the live. We're going to try to go live. I want to try to go live maybe like twice a week, maybe one day during the week and then one day on the weekend. So guys, I hope you guys all enjoyed the video. If you guys did, hit the like button, subscribe, and we'll see you guys probably later. I will probably post another video later.